Before there were Wall Street legends, there was Benjamin Graham, the man who taught the world that price is what you pay, but value is what you get. Long before technology, AI trading, and instant market data, Graham showed that true investing isn't about guessing the future. It's about understanding the present. He lived through the most turbulent financial times of the 20th century, and from that chaos, he built the foundation of what we now call value investing. A method based not on emotions or predictions, but on discipline, logic, and patience. Benjamin Graham was born in 1894 in London and raised in New York City. When he was still a child, his family lost nearly everything after his father's death. They went from comfort to poverty almost overnight, an experience that would forever shape his cautious approach to money. Graham was brilliant. He earned a scholarship to Columbia University and graduated at the top of his class at just 20 years old. By his mid-20s, he was already working on Wall Street, analyzing companies and quickly realizing something fundamental. Most investors were guided by emotion, not evidence. Then came 1929. The stock market crash wiped out fortunes and confidence across America. Graham himself lost most of his own investments. But instead of giving up, he studied what went wrong. He noticed that during the crash, investors sold great companies at irrationally cheap prices simply out of fear. From this insight, Graham developed his revolutionary idea, intrinsic value. He argued that every stock has a true worth based on its earnings, assets, and long-term potential, regardless of what the market says today. If a company was trading far below that intrinsic value, it represented an opportunity, a margin of safety. In 1934, Graham published Security Analysis. Co-authored with David Dodd, it became the Bible of financial analysis and introduced the principles that still guide professional investors today. Later, in 1949, he wrote The Intelligent Investor, a book that Warren Buffett would later call the greatest book on investing ever written. Graham taught that investing isn't about predicting where prices will go, but about buying when value exceeds price and selling when emotion drives markets too high. He famously compared the market to Mr. Market, a moody partner, who shows up every day offering to buy or sell at irrational prices. The intelligent investor listens but never acts out of impulse. Through his teaching at Columbia Business School, Graham mentored an entire generation of investors who would carry his philosophy forward. Names like Warren Buffett, Irving Kahn, and Walter Schloss. Their collective success proved that his ideas were timeless. Even decades later, when markets are faster and technology dominates trading, Graham's approach remains the backbone of long-term investing, focusing on fundamentals, protecting capital, and trusting patience over prediction. Benjamin Graham proved that wealth isn't built on luck or speculation, but on discipline and preparation. His philosophy reminds us that markets will always swing between greed and fear, but value endures. At Castillo Investments, we follow those same timeless principles, measuring value carefully, protecting capital first, and letting patience do the rest. Because true investing isn't about chasing the next trend. It's about recognizing enduring worth when others overlook it. Visit elcastilloinvestment.com to learn more and follow us for more financial insights.